Here we go, guys. We're taking a quick look at advanced micro devices, AMD, and then at the end, we'll take a quick look at Bitcoin. But really, we wanted this to be an exercise of example of what you can do once you learn this daily chart, okay? If you can't do this on the daily, in other words, pick out the location, pick out the prime real estate, and then identify and name the uh, the event, the candle that causes price to either break out to the upside or to the downside, then it'll be a lot harder to work on these smaller time frames. Okay, so as you can see here, we were in this gray shaded box, and we were basically doing an inside bar consolidation zone. So inside bar, this green candle here, simply just put your box around it. If you're someone like me that needs kind of more of a visual to see things, and you can wick out of it like we did here. Price, see how price came up here. Actually, this whole candle was green at one time. And if you weren't a more knowledgeable investor trader, a lot of people probably would have gotten in on this thing. And then before you know it, you were already at a loss by the time it closed. Now, yeah, it reversed and, you ended up doing good, but you don't know that this whole leg up here could have been a leg down, to the downside. So that's why you have to be careful of that and wait for, some sort of confirmation, like getting in close to the close. But this was our event. So that was our location, narrow range, even better than that it was in and around the 20. And then the event that causes the push to the upside was this big green candle here, over the 20, out up and over the box, up and over obviously our inside bar candle there. Okay. Then a little pause candle here. A lot of times this big of a push, this big of a bar, a lot of times you'll have, a day or two back test, especially back into that 20 possibly, and then a push to the upside. But, that's the daily. Wanted to show you that. And then once you get these daily locations, in other words, what's the best real estate on the chart to, potentially wait for an event to happen in order to get in. Of course, right after this happened and you got in, you'd already know where you're going to put your stop loss, either half the candle or the complete candle. That'd be up to the individual at that point in time, their risk management. Now let's go to the 2 minute and let me show you how that can turn into, you know, a little bit of money per day. But as you can see here, just knowing that, okay, you get two pivots, okay, you connect your, uh, trend line, and also you're going to, pull it down here a little further, even though all of this, hasn't happened yet, okay, but you can pull it down further, okay, and then we know that the third push to the upside, more than likely, is nothing really is 100% other than, some of the things we've gone over before were the 200 and the 20. Doesn't matter if it's on a 2 minute chart or a weekly chart, they're going to come together and get far apart. Okay. That does happen 100% of the time. But anyway, in this situation, the third push to the upside, especially if it hits it, you'll get the same reaction. In other words, a push to the downside. So we hit, came back, hit, came back. But this one, the reason why we went in there, and you'll know this, as you get more experience, you can kind of just sense it. So you had a high, really a high here, lower high, and then through here where we got in was yet another lower high. Of course, we put our stop loss just mentally just above the red candle we got in on. And as you can see here, we came pretty close, but we didn't close above the 20. So that was and then soon as uh, we went under that green candle, like right here, right here. Yeah, we were breathing a sigh of relief. Okay, so it's still kind of touchy. Like I've said before, you can only control two things regarding your investment. Number one is clicking that mouse to get in, whether you're looking for upside, to go long, or clicking that mouse to go short, like we did here. And then the only other thing you can control is clicking that mouse, sorry, to get out of the trade. And everything that happens in between those two clicks um, is, really out of your control. Okay, because you can have the right location, perfect location, the perfect execution, the perfect event, the cause price to, run to the upside. But, the next day or the next day after that, news comes out, black swan event, totally out of control, and the market can turn. And normally, if you're going to be wrong, it'll happen pretty quickly, over the next, if it's a daily, the next candle or two, or even on these 2-minute charts, it'll happen pretty quickly. So you can get out, reset your mind, forget about it, reset, look for that, wait, don't rush it, don't try to make it happen. Wait for that next location set up, wait for that next event. Okay. So anyway, we're coming down here, hit the 200, and I was a little concerned there that we might, bounce, which normally you do, but we saw that, a lot of the market selling off, so that gave us a little bit of, confirmation that we probably break through it. But anyway, from here, stop loss brought it down to here because we don't want to lose, we don't want to lose that one candle. So all this was good, okay? And then broke through it, thank goodness. And according to classical technical analysis, here we go again. You'll and see how that pattern is. One, two, three. Actually, even did better than that. According to classical technical analysis, when you break a support line, let's say, down, down, you break it. Many times you'll come back, retest it, and then continue to the downside. So that's how you get that leg down, you know, second leg up, but not as far, obviously, and then a continuation of the same uh, length of leg to the downside. Okay. And then the rest, we just kept dropping that stop loss, mentally and checking it every so often. So anyway, I mean, this is what, you have to look forward to as soon as you get comfortable, confident, and you're able to make, maybe 20 trades in a row, and get probably, uh, say probably, I don't know, you could do less than two. You could do, 9 or 10. You could do half of them or a little bit less than half of them. And if, meaning you could lose, 10 or 11 and still be profitable, still be, um, you know, doing very, very well. Okay. And the reason being is as soon as you that cash management, number one, and then your risk funds at risk, and then your stop loss. Okay, and we used that analogy before. Is you saw, you hired an employee, you did all the, you vetted them, you did your due diligence, calling their references, talking to people, calling their old jobs, background check, everything you can do. But once you hire them, it's kind of out of your control. And then, a day later, you see them taking money out of the cash register. What are you going to do? I mean, that's your stop loss. You need to file them right then and there. But some people, I mean, it'd be crazy to allow them to say to yourself, well, it'll change. They'll put the money back, or, they're not going to do it anymore. They were just having a bad day. And then, a week later, you see them do it again. A few days later, you see them doing it again. I mean, that's the same, you know, craziness of watching your your trade losing money. Okay, so the first time it's down, either half of that candle that you got in on or the whole candle you need to get out. I mean, just like that person stealing from you, that's the same thing. The market's stealing from you. You're going to keep letting it steal from you all the way until it gets down here. I mean, at what point are you going to fire that employee? At what point are you going to fire that trade that you put on? And it's not your fault. You did your due diligence. You picked, the narrow range, or whether it's the moving averages or price consolidation. You had the event, either a big green bullish engulfing clearing candle, or like over here, maybe a bottoming tail candle off the 200, or the 20, or if you're going short, a big, like right here, big topping tail candle here, uh, and you're above, quite, a bit above the 20, and then you're really above the 200. So that gap there gives you extra confidence that this thing was probably going to, roll to the downside. So even with all your ducks in a row, you're still going to lose. But, if you get out of there 40% of the time with profit, that's going to far exceed what you would be losing in the meantime if get those little small losses out of the way. And normally, um, if you're consistent on losing and it's over 50% of the time, then it's one or two things you're not doing. It's not 100 things wrong. Number one, look for reevaluate yourself, do a journal, see if you're getting in at the right location. Number two, are you, waiting for that event? Are you getting in too early and it sells off? You're getting in before it gets close to the close and you sell off. Trying to think what else. Are you trading against the 20? Like if we were trying to go to the upside now at extreme levels, okay, like if the 20 is really coming down, then you can trade against it because sooner or later the 20 is going to go back up. I mean, that's just, the market. But if it's coming, let me get that out of the way. If it's coming down here, pretty far, and you're trying to, go long here, as price comes up, thinking it's going to run past the 20, and you're trying to go long in here a million times, and then you keep holding, you get in here thinking it's going to break out, you keep holding, you add to your short right here, it keeps coming down, you know what I'm saying? And, without all this being there, I mean, if you do it a few times, you're going to get wiped out, okay? So, yeah, get your location, get your event, and for the most part, probably 90% of the time, you're going to have to be or need to be trading with the 20. If it's going down, look for the short. If it's going up, but the majority of the time is going up. So see narrow range. I should have showed you that to begin with. See little location. See location here. Uh, but anyway, big event candle right here. By now you should be able to know that. See, even location down here, sideways consolidation under the 200 is either going to break down or break up. Broke up real hard in there. And then when you start taking out those high pivots here, previous resistance, maybe, slide in there a little bit more. Came back into the 20, broke out, took out this high pivot there, in, so on and so forth, okay? Now you start reading these, able to do it on the daily, then you can go to a much faster, let me see, here's Bitcoin, a much faster chart, this 2-minute chart, 1, 2, 3, 4, 5, 6, coming into the 20. So we'll see how we do here because, we were on the 20 at narrow range. Where's the candle that broke out? Oh, yeah, right there. Pause candle, add, coming up in close to the 200, big sell-off candle. Probably would get out, okay? I mean, that's, you got to, some of this stuff, it's not obvious first off, but it will be as you get going, okay? And then we said we finish that. Let's go to the daily. Still have, less than 2 hours, 1 hour, 29 minutes. Man, he just couldn't do it. see, we were green all the way up here. Everybody was happy. We're looking for that two down, one up, then blow out, up to the upside, possibly this weekend, but that's not going to happen. So, or the chances are slim that's going to happen. So it looks like we're going to be in here between the point 0.5 fib or 50% of this high and low coming through here, and then also the big slam down candle. But this point 0.5 fib, in other words, 50% of this whole move. See that swing low, swing high, 27% down. I don't think if we go past that, I don't think we'll maybe get to 30%, another 3% down or so into this consolidation zone. I don't see us, uh, going to 35, 40%, like we have done in other post halving cycles. Okay. But anyway, here we are, expectation. We're just going to be in here. And what are we trading in right here? If we took everything off, just right quick. See sideways consolidation in here, inside bar. So yeah, the further we go, the stronger that push either to the upside or downside will be, just like right here. Here was another one. We didn't go that wasn't too many days, but still. But thank goodness, we have that big buy up candle here, inside bar now. So we'll just sit on our hands and wait, okay? Because I'm definitely going to be getting in to one of those, I'll just say ETFs, just because I can more easily short it, go long, go short on that thing. Not financial advice, but I'll be full disclosure with you. This IBIT, not ready to get there yet. So just waiting. Uh, and then we'll do that. And then when the cycle's over, we'll go short BITX as it does twice. It's a little risky. It goes 2x, a little more leverage there, even though it is leverage, but it's not. In other words, you're not leveraging extra money in your account or anything weird like that. It's just what I mean by leverage, and I should have explained that better yesterday when I did that video. But it just 2x's the normal percent. If Bitcoin is going down 4%, it's going to go down 8%. So that's what we're looking at entering in 2026. And then between now and fourth quarter 2025, first quarter 2026, we'll be in this IBIT. Because I already have a little bit of Bitcoin sitting there, but I want to use this to really work that market. And if you guys want to follow, fine. If not, fine. But I understand. And then we'll keep the those those lotto calls over here with altcoins. That's really where the money's going to be made over here, but it's a little bit more risky. Now, I think these up here are going to be the least risky, not financial value, just because they're going to be the institutions, the whales, and Wall Street's darling altcoins. Why? Because they're the AI. Everybody's all about AI right now, and you just got to go with the trend, go with what's flashy, cool, trendy out there. Well, that's where the money's going to be coming in to push these to unbelievable bubbles. And I think that's what's going to happen. Everything's in a bubble right now. Think about it. Housing all over the country, markets, stock markets all over the country. What's not yet in a bubble? Crypto, Bitcoin. So that's where all the money's going to go, coming off risk and getting in here to exploit this market, over the next few weeks to start that trend to the upside. But all right, guys, enough of that. Thanks so much for being members, and we will see you on the charts.